This is the Lone Crater YouTube. We hope this video helps.
In this video, I will explain how to study market structure. First, let's define what market structure is. It essentially describes how prices arrange themselves across time within chart data, showing the constant interaction between buyers versus sellers. This understanding is key to identifying recurring patterns and anticipating potential future moves, which is vital for making informed trading decisions. Next, we identify the market's trend direction. Price can move in an uptrend, making higher highs and higher lows, or a downtrend, forming lower highs and lower lows. Sideways movement indicates accumulation or distribution. Look for swing highs and swing lows. These are key turning points. Price action unfolds in impulsive moves, which drive the trend, and pullbacks, which are temporary corrections. Now, let's talk about structural changes. A break of structure, or boss, occurs when price moves past a previous high in an uptrend or a previous low in a downtrend, confirming the trend's continuation. Conversely, a change of character, or CHO-CH, suggests a potential trend reversal. After a BOS, it's often wise to wait for a pullback before entering a trade, as this can offer a more favorable entry point. For a deeper understanding, employ multi-timeframe analysis. This means observing the market across different timeframes, like a 15-minute chart versus a 1-hour chart, to gain a clearer perspective on price action. Also, map out key support and resistance levels, as these are zones where price has historically reacted significantly. Remember to check the description for a link to Darn Tough Socks and other great deals. Combining these techniques enhances your ability to anticipate market movements and refine your trading strategy.
Thanks for watching. Consider subscribing if we helped you.